Hello, hello, hello. Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen. So in this video, we need to go ahead and I want to communicate something to you guys that's important, right? Because this is something that we need to talk about. So, how you doing, Cinder Chops? I cannot wait to get your package. Cannot wait. It's gonna take some time, unfortunately, but I cannot wait to hold it in my hands. And yes, so can't wait. So I would say I'm trying to get something here that is important. There it is. So try to find it. You know what I mean? There it is. All right. So this is actually really good. First off, Walgreens is going down. We got to figure out why, what's going on there. But something that we need to talk about that a lot of people are noticing is the S&P 500 from the October 2023 lows is about to break 5,500, right? Which, if you looked at our prior research from 6 months ago, we said that due to our institutional data sets that we have, right? We were able to say that, right? And since October 2023, the S&P was able to add $11 trillion in the market. So we're like, 10 years ago, I'm going to let's see if we can ask the stock terminal here. I don't know if it knows. What was the market cap of Apple 10 years ago in 2014? Let's see if it knows. So yeah, the market cap of Apple 10 years ago was $463 billion. Right? So we were talking essentially in billions here. Let me just make sure. Yeah, it's around 643, 400, $500 billion. So it's around $500 billion up and down, as you know, the market, right? So what I'm trying to communicate to you guys was that 10 years ago, we were talking about the big companies, Apple, Microsoft, all these companies, and the market caps of these companies were like $400 or $500 billion, like billions. 500 billion was like the caviar of caviars. This was like the Beverly Hills of the hills. A $500 billion market cap was the essentially that was the creme de la creme, right? But now you go ahead and take a look at Apple, and we're looking at $3.2 trillion. I mean, it just literally crossed a trillion, and it's just 0.21, which is nothing short. 210 billion, whatevers, right? We go ahead and pop NVIDIA here. Whatever, 3.04 trillion. Amazon, 1.99 trillion. What else? Microsoft, 3.37 trillion. So the point that I'm trying to tell you guys is we're talking about trillions now, right? We're no longer billions. Is just we're about to basically get our first trillionaires. I think it's going to be Elon Musk or Jeff Bezos, or who knows, right? We're about to get trillionaires soon in the next 20, 30 years, right? So less, right? So the point that I'm trying to make to you guys is I think Elon's going to be the first trillionaire, I think, but we're talking trillions now. We're no longer talking billions, okay? So now let's go ahead and look at Clover Health. Clover Health is 657.95 million. It is a drop in the bucket, right? It is a drop in the freaking bucket. It is like a speck amongst specks. But again, this is how people make their money, especially for retail investors. You don't need to pick a lot of stocks to do well in the stock market. Okay, you just need to pick some. The point here, and very quickly, shout out to HJ for utilizing our stock terminal to its high effectiveness. But he went ahead and he put in one of a command, this command here, right? For people that are interested, OP Equity PC. And speaking, if you guys want lifetime access, You guys can look at the coupon code down below, SAS, get $1,000 off. But he looked at this and it gives you this message. It gives you this graph, okay? And this graph shows you the put-call volume ratio, where the market is extremely bearish when it's up here, and when the market is extremely bullish when it's down here. What I've noticed is that the extremes are the times of opportunity. It's a great time to start shorting stocks down here. I'm a little scared too because the market can become irrational longer than you can become solvent, right? But interestingly, if you don't recall, October 2023, the market was here, okay? The market was extremely bearish, right? And this was the greatest time to buy, right? It was the peak of stupidity. And that's when I made my video, small caps are about to explode. The stock market's about to go bullish. And, people were like, it's a sucker's rally. I don't care. Yada, yada. Okay, stay poor. Okay, I'm sorry to be very disrespectful. Okay, you basically work your 9 to 5 because we need you, right? You are part of functioning society. We need you. So us rest in the capitalism and the bourgeoisie make money, right? I know that seems harsh, right? But I'm trying to show you how these Wall Streeters think, right? In fact, they don't even care about teaching. They want you to stay 9 to 5, right? They want you to be the cogwheel of corporate America. To all the doctors that are watching, don't think you're any different, right? Yes, your income is high, but you get taxed. They take almost half your money, and then you're just part of corporate America. You don't believe me? Start practicing your own medicine at your hospital systems and look at what people are going to message you and check your inbox, okay? Everyone's a cogwheel in corporate America. You want to break free? You got to learn how capitalism works, okay? All right. Our stock terminal was able to give the correct data. And if you go ahead and look at October 2023, let's look up NVIDIA. October 2023. We'll go ahead and do a year. Here's October 2023. NVIDIA was around, right here, October 20. That's when that was peak fear, $40. Then all of a sudden, right there, 234. Right? We were talking about SMCI. We called out NVIDIA way before that, but SMCI October 2023, right here, it went ahead and 4x'd. Right? Look at Oscar. Okay, let's see what Oscar did. October 2023. Yeah, it was around 4 or 5. We called Oscar way before that anyway. Look at that. 4x, 4x. Okay. Jumia. It was around 229 to peak, 3x, right? So the point that I'm trying to tell you is the market, the bull market started, and it's been a selective bull market, and the market's trying to broaden out. So let's talk about this video. Okay. Given that now we're talking about trillions, and given that, Amazon's 2 trillion, Meta's, I think, in the trillions now too, right? Meta's in the trillions. Meta's a $1.13 trillion company now, right? Tesla's still not a $1 trillion company. It's going to get there at 615 billion, right? Microsoft's over 3 trillion. Apple's over 3 trillion. Nvidia's over 3 trillion. So the question here is, where does that leave us with growth stocks that are in healthcare? Well, if you look at the behemoth of healthcare, the behemoth of United Healthcare, you can see that it's a $447 billion company, right? And it's a little bit more brought out and spread out, but healthcare is the second largest, I think, to the overall, big 500 companies, right? And this one's at 447 billion, which is equivalent to that of where we were 10 years ago. Okay. And we're talking billions here, right? For big companies. And if you look at Humana, who has a high concentration of Medicare Advantage, they got 43 billion, and they were at 50, 60 billion not too while back ago when they were at a $530 stock. Remember, they were in the over $500, right? And they dropped from peak to low here. They dropped more than 44.8%. They dropped near 50%, almost halving, and now it's at 35%. Year to date, down 23.36%. A year, down 19, et cetera, et cetera. Okay, so anywho, so now that we kind of just think about this for a sec, we're talking trillions. The market now is talking trillions. There's a lot of money to be made. A lot of technology is making things cheaper. Gross margins are going to get better. And we have disruption. We've made the video about disruption. Why am I confident in a Clover stock price of anywhere between 15 and 75? We're going to go and do the calculation here, right? I'm confident in this. And by the way, people think, oh my God, this is in the trillions. You talk to a normal day American, they're going to say, oh my God, $1 stock price that went to, like, if you talk to a normal day American, and we called out Chipotle stock on our portfolio hedging modeling system, and year to date is over 39%. Now, Bill Ackman took some cashed out on some shares. So now we're getting some institutional selling. In fact, let's just kind of go, you don't kind of pimp out a stock terminal here for a sec. And let's kind of go down here and let's go at stock terminal and say, when do I know? Give me the command for institutional hedge fund ownership. And again, if you guys want access to this, lifetime access. So here's the institutional ownership command. You go ahead, drop this. And what is it? CMG, right? CMG. So ownership is 9.36% in the last 6 months. Again, we called it out on our stock terminal on January 1st or 2nd of this year, and we're up, 50% from peak to high, right? I expect this to go down, right? But the point is, you talk to a normal day American, they just did a reverse stock split, a stock split. They just stock split 50-1. But back in the day, Chipotle used to be a $2,000 stock. Okay. It used to be a $2,000 stock. And, Americans are like, damn, that's expensive. I can't afford that. They know nothing about market cap. It's okay, this isn't correct. It's more than 1.7 billion. Google needs to fix itself, right? But essentially here, market cap. You see what I'm saying? It's all this misinformation here. The market cap, yeah, I don't think Chipotle that makes $2.7 billion in revenue is some baloney. Market cap is 92.2 billion. The hell is this freaking Google? Google's wrong. Shit. Jesus Christ, guys. Excuse my language, but what the hell is this? Right. Anyhow, you could do better, Google. What is this? All right. Anywho, so the point that I'm trying to tell you is the market, normal day Americans think $75 is not a lot, right? Sorry, it's a lot. Like, holy moly, I made a lot of money. But if you're Warren Buffett, you can't 75 extra money off of $1 billion, because the market cap of this company is 600 million. If he were to buy, he can't buy $1 billion. He can't buy $1 billion worth of Clover. He can't, right? So 75 divided by 2, that's a $37 billion market cap, which is still less than Humana of around 40 to 45 billion, right? So the point that I'm trying to basically communicate is that there's $6 trillion in money market funds. There's a lot of T's involved now. There's a lot of trillions. And we know that the Medicare Advantage market, in fact, let's see if we can pull up just kind of quickly here. Just pull up the help menu here on here. Let's do stock fundamentals. And let's see if we can open up an SEC filings, type in CLOV. And let's do SEC filings. Let's do about 15 of them. So we're going to pull up the SEC filings for Clover. Again, this whole part of our stock terminal, yada, yada, yada. So if you guys want access, again, lifetime access, a coupon code $1,000 off, link down below. You guys can get all this information, right? So I think it's one of these, but it's one of these forms, right? Where Clover talks about the Medicare Advantage market. Sadly, it's not. These are just forms here, right? They talk about how the upcoming Medicare Advantage market is such a sexy market, how it's going to be around 750 to 800 billion dollars in the whole market. And I think it's going to be $1 trillion market in healthcare. I think health. Hold on, guys. I'm sorry, guys. My dog's freaking out here. Okay, sorry. Right, babysitting dogs. Right. So, anywho, so the point that I want to make here, I can't find the actual link. It's like one of these links. Here, hold on. Total Medicare market. So maybe we can find out the total Medicare market here, just to kind of give you the idea. This is supplemental. This is not. Yeah, here it is. This is great. Okay, this is right here. This is from CMS, so you know it's a reliable source, right? So Medicare spending grew by 5.9% to $944 billion in 2022. 21% of total Medicaid spending grew 9.6, which is $800 billion. Again, Medicaid is different from Clover's market. But overall, we're talking about $1.2 billion, right? And I want Medicare, right? The point that I'm trying to make here is that the Medicare market is going to be $1 trillion market in the future, okay? And the problem is society, health, hospital expenditures grew by 2.2%. Society is not well equipped in handling the increase spend in regards to taking care of all these elderly people. And I'm going to be mindful to you guys. The elderly people now are going to be a lot more healthier. I know they're sick than all of the normal people that are like of 30, 40, 50 years of age, given that they have been locked down through COVID and probably don't exercise, and the food quality's gone down and inflation's gone up and food is expensive. So, I mean, this trend of healthcare spend is going to be pretty incredible, right? So the thing here is, and again, I'm trying to explain to you kind of my thoughts on the matter. And this is where kind of the thesis comes in. And some people can see this and some people can't, right? And that's where the opportunity lies, right? Some people just can't physically see it. They just don't have the balls to essentially see this, right? So, which is fine, right? Again, that's where opportunity comes. So, do they talk anything about Medicare here? Yeah, Medicare highest in Florida. That's where a lot of people are going to. Clover's kind of looking at that market, but this thing is going to be $1 trillion market. Medicare spending is going to, it's already $1 trillion market, right? It's going to be more than $1 trillion market in the future. And the beautiful part is, Medicare versus Medicare Advantage. Clover can now get into that Medicare with the ACO side, right? Especially with their Clover Assistant, right? But we know that the whole overall healthcare spend can't pay for all these sick people. So now the government is like, we need to start reducing spend. We can't let these United Healthcare folks and Humana folks make all this money off of the American people's back and still have people dying, right? And still everyone dies, but still have people their healthcare outcomes don't improve. You know what I mean? So, and it's just more expensive. So there has to be software and technology to fix this. Okay. If you go ahead and take a look at every healthcare business out there, okay, United Healthcare created their own AI, and now they're getting sued by the government because the AI was not good. It was denying claims. Okay. And it just wasn't great. Now, could that happen to Clover? I don't know. I don't think. because it's actually in the benefit of patients. It's an assistant. It's not a substitute. And United Healthcare is trying to create a substitute. Okay. So I see kind of the whole overall market, and I'm like sitting in Mount Lemmon, or Flagstaff. We'll call it, everyone knows Flagstaff. I'm sitting in Mount Everest. How about that? And I'm looking down at the stock market. Okay. And I look at the tech sector, and I see that we're talking trillions in the tech sector. Okay. And I look at it and I see the healthcare, and we're still talking billions in healthcare. Right. Then I look at emerging markets like Jumia in Africa, and those stocks are going to go out crazy. We called out some Indian stocks that went up a lot, right? The point is there's a lot of opportunity right now, and I'm looking at healthcare, and I work in the healthcare business, and I see that healthcare they're still faxing information, okay? These folks are still faxing with all their knowledge and with all their money. These people are still faxing information, right? So I see a breeding ground for disruption, a breeding ground where people can actually take advantage of this. And the only people that I see that are actually doing this is Oscar, Clover, and a couple of other businesses that are essentially kind of creating this disruption in the healthcare market space. But the one in particular, in specific, is Clover Health. The whole point, the last resort, and the mission of Clover was to get this goddamn SaaS activated. That was the whole point of it, right? Is to get that Clover Assistant. There's a lot of people in here that are like, this was kind of the thing. This was what we're waiting for, right? Right? So that was essentially the overall goal. So then now here we are, and I already told you they exited the ACO market in December, and then 4 months before, they went ahead and already knew that they're going to have a SaaS business because they freaking coined it Counterpart Health. They already knew that they were going to do SaaS. So this company knows what it's saying. It doesn't give you the whole picture until it's ready, given that healthcare is competitive. People in healthcare are competitive. It is a cutthroat industry. And I recently learned this as I'm in the healthcare process. It is disgusting. No one works together. People are afraid of lawsuits, and it's just disgusting. It's really sad how this world works. You know what I mean? It's corporate America. What do you expect, right? I mean, we spend all this money on healthcare, and then we're ranked of what, third world country, developing country? I mean, come on, right? So Clover now is in a position where it now has a software that it is able to essentially distribute quickly, onboarding less than an hour. Okay. And let's just pull up Clover here. And onboarding less than an hour. And it's able to take this and integrate it within healthcare practices and do a shared savings model. A model where, and I'm going to go in the comments right now, a model where the provider, payer, whoever is able to share the savings by utilizing the software that works, and they're confident in it. They're confident in the software. They're confident in its ability to reduce costs. Okay. And that's actually really good, because imagine if they sign up healthcare practices around the country, and all of a sudden they get millions to, let's say, billions of dollars in revenue because of the Counterpart Health. The way that's evaluated is it's going to be a multi-bagger, because it's going to have a price to sales of more than 10. I would say price to sales around 7 to 10, right? maybe we'll do the SAS average of 5 to 6, but I would say 10, right? I would be very surprised, right? Or let's put it this way. I wouldn't be surprised if it was 10, right? Right? So we have all of this going here, right? All of this working in proximity. We have the healthcare space disrupting. CMS is being tighter on the money. It's no longer a money printing field where, executives are getting paid top dollar and they're just basically, shareholders are reaping the benefits. So what did Wall Street do? Wall Street now is leaving United Healthcare, is leaving Humana. In fact, I'm curious because, Wall Street, when there's a buyer, is always a seller. So whenever there's a seller, there's always a buyer. I'm curious to see the institutional ownership for Humana. I'm curious. You see Humana's institutional ownership, ladies and gentlemen? Again, it's all part of our stock terminal. What does it tell you? Institutional ownership is down negative 9%, meaning that institutions are pulling out of Humana. Now, I'm curious, aren't you curious kind of to see what United Healthcare looks like? Right? Let's look at United Healthcare. I'm just trying to zoom it in for you guys so you can see. Okay. UNH. United Healthcare is up 1.67. Not a lot in comparison to other stocks, but still pretty good given that they have a pretty good moat. Let's look at CVS because their MCR is pretty good. So, it's down. Now let's go ahead and look at Alignment Healthcare. Alignment Healthcare, anything? Looks like we're not getting anything. Oh, no data found. It's still under the radar. Let's look at Oscar. No data found. All right. This is where you turn into your stock terminal. You open up your stock terminal. And I don't know, let's see. Institutional stock ownership. And then institutional stock owner by symbol. Let's type in Humana. You go back up here and you type in, investor holding change negative 132. They're selling. They're pulling out of Humana, right? Let's go ahead and see if we have data on Alignment Healthcare. Of course we do. It's a brain machine. Investor holdings. So what do I look at here? Well, let me make sure I get this right. Yeah, Humana was 132. Humana is 132. But if you look at Alignment Healthcare, it's 121. So these guys are buying Alignment Healthcare. So now let's go ahead and type in Oscar. You go Oscar. You go up to Oscar, and Oscar 197. Okay. Let's go ahead and type in CLOV. Okay. 151. Okay. So the point that I'm trying to share with you guys is is the market is changing. Ownership is 70%. Clover is 20%. Let's look at the Humana alignment. Percentage of hedge funds owning it is around 86%. And because they're all banking on Alignment Healthcare. Humana, let's see, percentage ownership is around 90%. So a lot of so again, I'm giving you guys this live, kind of doing this due diligence in live. I'm not scripting. This is a live, okay? It's script, okay? There's no script here, okay? So okay, we have all these numbers. What does this mean? Right? Well, You could go ahead and ask the stock terminal, right? But I mean, you literally will be able to analyze. I mean, honestly, here, let's see this. Let's see if it can do this. Humana. Let's see if it can. I haven't done this before. So I don't know. What can you conclude from the below text? Now, given there's probably a lot of text here, so let's see if it is able to figure it out. Okay. So 151 to 139, a total of investors held. Total of investors closed decreased significantly. There was a decrease in new positions and increase in positions closed. Humana decrease in 132 investors. So maybe I read it wrong. Did I type in the wrong one? Oh, sorry. Last investors hold. Yeah, there was a decrease. Versus yeah, so there was a decrease in Clover as well. So let's go to Oscar. So you see an increase in holdings. 167 to 182. Sorry, I misread it here, right? Again, non-scripted, right? Alignment Healthcare. Oh, we got some sell in Alignment Healthcare, right? Well, hold on. Actually, let's go up to the most recent. No. I apologize. We got buys. It's the most recent. This is the most recent one, right? So a lot of investors are pulling out of Humana and they're putting it in Oscar and a lot of other companies that are in the new world of in terms of the new world of disruption for Medicare, right? Interestingly, I want you to read this, right? The put call ratio for Clover increased substantially from 0.39 to 8.2, right? So what does that tell you? So it tells you that they were shorting the shit. Again, it's all part of our brain machine. It shows you they were shorting the crap out of Clover. Okay. And there was so a lot of shorting. Okay. 20 million was pulled out of Clover. Okay. Versus 13 billion was pulled out of Humana. 13 billion was pulled out of Humana. You want to know how much was pulled out of United Healthcare? I guess we could see. Take a look at Clove here real quick. Again, this is Clove and their filings in March 31st. Remember, what has happened since March 31st, right? I'm doing this on purpose so you guys see this. On March 31st, again, if this is boring to you, stay far away from the stock market. You guys are going to lose your shit, right? You're going to lose your money, right? You really got to know your stuff, okay? So what has happened since March 31st, 2024? We're going to go to the comments soon. I just want to finish this idea here because we're going to do the intrinsic value calculation and all this other stuff, right? So what's changed since March 31st? Well, first off, they released the podcast with Vivek and Andrew Toy. They did a $20 million repurchase buyback program. So, institutions, and it's funny that they did 20 million. You have to ask yourself, why did they do 20 million? Could it be that institutions sold 20 million? So they're like, screw you, institutions. We're going to buy the 20 million now. Give it to us, institutions, because you don't know what we know, because we know more than you. Okay. What has happened since March 2024? They went ahead and Vivek placed a $1 million buy order, so another $1 million to cover that 869,000, right? They released their SaaS business finally, right? So now what do I want to notice? Once institutions start updating their SEC filings, I want to know what changed. And I want to know how much money did institutions start piling down on Clover. And you kind of know where I stand on this. I speculate that there is going to be an increase the amount of institutional owners to load the boat. We are already starting to see the smart ones like JP Morgan Chase and a lot of the other ones start buying. Okay. Interestingly, I expect the shorts to start leaving Clover, given that they literally went from 39 to 82%. The shorts have been crazy on this one. Okay. They even started shorting Humana. Right. Interestingly, I want to know how much money has left. I want to know how much money has left United Healthcare. So you could see it here. Let me see. Total investment change. Negative $20 million has left Clover. Okay. So now let's see how much money has left United Healthcare. There it is. $57 billion has left United Healthcare. $57 billion. $57 billion. Wall Street has left, and they pulled out of United Healthcare. United Healthcare lost $57 billion. And guess what? It's actually lost more than that because it's lost more since March 31st. It's lost more. But they pulled out 57. I'll just use the data here. They pulled out 57 freaking billion. And then they said, screw you. We're going to short you too, I think, right? For what? Hold on, guys. Let me just pull this out here. So they pulled out 57. Again, I'm sorry this is a long live. I'm really sorry this takes time. I can't organize this, but I mean, this is a lot of information. So I'm sorry. I love you guys. I wish I can just give it to you all, but I'm just showing you kind of in live because I'm doing this. I kind of knew this already because I was kind of look at the stock price drop, but it's good to see it, right? And it's all part of our stock terminal data provided by Al Stock Trades, right? Data by us. This is our data. Okay. So 50. So okay. So let's kind of think. How much money did they pull out from? Oh yeah, Oscar. They increased, right? But I want to know Humana. So let's just make a list because these numbers are big. You know, it's hard to kind of put this all here. So let's put those numbers. Let's open up a little text box here. Let's go here. So Humana, 13 billion, I think, right? Let me make sure. Hold on. So they lost, yeah. They lost 13 billion. Humana lost 13 billion. So we're just going to type. I'm not going to type in all the numbers. We're just going to kind of average 13B. This was Humana. Okay. Humana lost 13 billion. Okay. United Healthcare lost. I know it's 57. Say 57.5. Screw it, because that's still a lot of money. 57.5 B. So United Healthcare lost 57.5 B. Lisa Gill, the incredible Lisa, the girl that, the lead, the lady, she's a very smart lady. She knows more than me, right? She said CVS is going to be doing great, right? It's funny how that works. CVS, institutions bought CVS. They're buying the dip on it. Again, it has a superior MCR. It's a pretty good MCR, but it's still down negative 27%. The market's just not having it. Perhaps maybe retail investors are selling. I don't know. Aren't you a little bit curious? Everyone's talking about Walgreens. Why is Walgreens falling? Aren't you a little curious about what are institutions doing for Walgreens? Let's see. They are they pulled $1.5 billion out, which is significant considering it's a $10 billion company. So yeah, they're pulling money out, right? Year to date, it's down 50%. There's a lot of issues surrounding Walgreens. We're going to get to it later, but right now, there are other companies that are struggling right now in healthcare, but I'm just going to focus on these companies. Okay. So 13 billion plus 57.5 billion. That's $70 billion in total. So it's around, what is it? 70.5. So around $70.5 billion has left healthcare. And $70 billion is standing on the sideline now. Okay. And people in their high rises on Wall Street that look at us as peasants, as scums of peasants of the proletariat's peasants of society, they're looking down and they're saying, where is the next Humana and United Healthcare? And so far, a lot of them are banking on Oscar stock, given that it's up 121%, 95% and 121%, right? It's doing pretty good. Still unprofitable though, right? So, former CEO of Aetna, it has a lot going for it, okay? But a lot of them discounted Clover Health, given the stock price and given that it's the one that's second best performing out of Oscar right now, over United Healthcare and over Humana. Now, I speculate we're going to start seeing increase in institutional ownership. So what is that going to do to the stock price? It's going to go up. It's going to go up, right? So this may have an opportunity to be a big player in the healthcare sector, both domestically and internationally with their software. Right, asterisks on international, because it can be used, and they said that. Interestingly, if you go 1.5 and type in Andrew Toy, he's talked about this, how he mentioned it before about how they think that maybe they can become $150 billion business. Again, that's a lot. That's a $300 stock price. That's crazy, right? But if we were to say Clover takes, the healthcare sector is going to be a $1.2 trillion industry in the next 10 years. If Clover can take 10% of that, they're going to have a $120 billion market cap, right? Let's say they take 5% of that. Okay. That's a $60 billion market cap. That's a $120 stock price. Okay. The point that I'm trying to tell you guys is disruptions here. This is the only AI advertised healthcare stock in the market. Once it becomes free cash flow positive and net income positive, ARK Invest and a lot of other, hedge funds are going to start coming in on the company, and then you're going to start seeing the narrative change, right? And people that are in our stock terminal, you guys now have the power to go through these institutional ownerships. And again, all I did was I activated the help menu, And I literally clicked the button institutionally stock ownership here, and you could click on all these here, and then you could type in, you click on this and you type in the thing, right? It's very user friendly, right? And you can look at other things that we have regarding institutional ownership. Again, this is data. This is very good data, guys. Again, guys, this is the data that they don't want you to know about. Okay, there's a lot you can learn from this data. You want to care about how money is moving, and if you want to know about what institutional investors doing and what you could do that here too. Okay. So now, given that we just talked about this gestalt of where we see kind of Clover, now let's go ahead and talk about the numbers. So now this is where we're going to go ahead and do this. Just very quickly, let me just kind of, sorry, a little heartburn there. Now let's go ahead and quickly talk about here, and let's pull up Clover. Again, this is part of the technical and fundamental analysis section. You just click on here and you see this. And let's go to week. Or no, we'll go to day. And we'll type in two indicators. We'll get a simple moving average, and we'll update the simple moving average to 50. Okay. We'll do another indicator, and we'll do another moving average here, okay? And we'll update this moving indicator to 200, okay? And we'll make it red so you can kind of see the two difference here, right? So we are about to undergo a golden cross, right? Where the 50 and 200 day meet. And has that happened before? It has. It happened right here in the market, went up to $100.55. So a lot of day traders are waiting for that, right? So I assume there's going to be some resistance here, right? But once this thing passes this resistance, you're going to get this one here at 348. Then we have this gap. Remember technical analysis, guys. Gaps always need to be filled. And this is the gap remember that gap that we just dropped? This is the gap that we need to fill. That was when they did their offering. Remember the offering that everyone was yelling about? Right? So this is the offering here, right? $6. And then as you can see, this stock really hasn't really been over its 200-day moving average. So now we're starting to consolidate, and we're starting to form this kind of horizontal line pattern. Like I said, you know what I mean? This is the accumulation phase, right? We're going to start seeing that. And if you go ahead really quickly, let's go to the week. Again, still a new company, not a lot of data here, but you can see this is pretty bullish, right? It's always been stopped by the this simple moving average here, the 50-day, not the 200 days, not a lot. You can't have a lot there, but you could see it tried to it was probably it only showed sign of strength above this moving average, but again, each bar is a week, so about 1 to 2 weeks of strength before it started falling. Now we have 1, 2, 3, 4, 5 weeks of strength, and it's still, so you can see there's a different, again, this goes back to Renaissance technology, goes back to quantitative analysis and quant analysis, and there's a lot of data that comes into this, but we can use our brains, right? We see a lot more green here, right? A lot more bars, right? So obviously it's quite different, right? The question is now, is it going to stay? And I would say it tried to fall and then it bounced back up. And again, this was more the, right, it bounced back up. The question now is, do we need it to fall again to kind of create that stabilization, or is just going to, it doesn't have to, it can skyrocket, right? It depends, right? So the weekly chart is very bullish, right? And all we need to do is pass this, and the next level is here, right? And again, this was kind of call this a double top, right? This is where the double top happened here, and then it kind of crashed. It was very bearish. So once we pass this, it's pretty much game over, right? It's pretty much checkmate, right? So again, now that we kind of talked about the technicals, the overall gestalt, and kind of how I feel over the market, and just kind of give you kind of the overall 30,000 foot view, we got $70 billion now sitting on the sidelines, and that's just in 2 companies. United Healthcare and Humana has $70 billion escaped from it, and it's probably going to be more. And I'm sure every time Humana gets damaged, I'm sure it's going to drop more. We'll see, right? Maybe the next earnings is going to drop more. I don't know, right? But, $70 billion has basically escaped the market, and now $70 billion is looking for a new home. What is going to be the next one? Wall Street's just not going to buy Clover out of the whim just so, it can potentially make money, right? But if this thing is showing promise, and if this thing is spreading like wildfire, and this thing is growing, then it's like, holy shit, man, this thing's going to be it. My only kind of annoying concern is, well, hold on. Give me 3 seconds here. 1 second, because we're going to do an intrinsic value calculation here. 1 second. Just let me un momento. Yeah. Just one little bit here, guys. Hold on. Sorry about that, guys. Let me just kind of put this here. And then, oh yeah. Sorry. Oh shit. I'm doing here, and then we go here. Sorry, I had to respond. Wait, what? Hold on. Sorry, guys. Sometimes things are silly, so I have to remove this. There. Sorry, guys. Okay. Oh, we're good. My apologies. Okay, so now let's go ahead and do the intrinsic value. Again, sorry, guys. Again, this is live. I'm doing a lot of things on the side here. Okay, so let's go ahead and do this here. Okay. So now that we kind of did this and painted the overall picture, well, now let's see, right? So Clover's sitting at $1.3 billion. We said it's around, 7.5%, $97.5 billion in free cash flow. 10 and 496, right? So the question now is the growth rate. If Clover continues growing at 8% and they lie to us and they say, oh, sorry, we said we're going to return to growth, but we're never returning to growth. We're not a growth company. We're going to grow 8% for the rest of our lives. If you believe that, then I recommend you go see somebody, right? But if we do that at 8%, you can see now the stock is starting to be accurately priced to the fundamentals. Okay? Because what is the recession case now? Again, it's growing 8%. We're using 0.075. Why am I using 0.075? Well, if you go ahead and multiply the last earnings in March and you multiply the revenue by that, and you'll get 0.075 is equivalent to $25 million in free cash flow. So it's a pretty good accurate assumption. Also, if you multiply that with Humana, you get the same thing. Okay. So then you go ahead and open up Clove, the price, and you can see it's $1.30, which is sitting at the recession at $1.33. So you can see now the intrinsic values now are starting to align. Whenever you start seeing this is very good. Okay, this is good. That means we're about to, we're sitting in the rocket right now, and SpaceX is counting down when we're going to moon, right? And they're counting down, and we're just getting ready to just go to the freaking moon. Okay, so that's good, right? Are we going to be in a recession? Are we in a recession now? I doubt it. I mean, seriously? No, of course not. I think, in the coming months to maybe a year or two, I don't know, we are going to be seeing these prices, and you're going to see that, this is around that resistance level near that double top. If you look at the technical analysis I was pointing out here, right? Right around here, right? So the question now is, when is Clover Health going to increase its revenue? Well, they just increased the 3.5 stars, so we know that they're going to return to growth phase early in 2025. And that's their Medicare Advantage plan. And by the way, This is 0.075, 7.5% of revenue. SaaS is more like 20% of revenue, indicating that this is just basically evaluating Clover Health at a Medicare Advantage insurance business, which we know it's not. We know it's a data company. So these numbers can get even better. Okay. So are you starting to see the investment? Are you starting to see the picture? Again, I'm trying to let you inside my mind. Okay. And this whole Al Stock Trades platform is my mind. It's an educational platform. And again, we're trying to build a community. So thank you to all the people that purchased. Just only like literally 2%, 3% of you have integrated in the stock terminal. I recommend you do that, please, right? So, because, so you got to get to know the people, right? We got some really cool members. Okay. So when are we going to go up? When is the revenue going to go up? Well, I mean, they just got 3.5 stars, so they might increase revenue in 2025, right? They said that they're going to get a little SaaS revenue in 2024. They're going to get a little bit. But then they said 2025 is going to be significant. And then Andrew was like, yeah, it's going to be like ACO, but not as much as ACO. We're not going to grow 160%, but we're going to try to basically grow. The question is, how much are they going to grow? That's the $1 million question. And I have a couple of ideas, and we can kind of shoot the shitter, right? Excuse me, it's an American language, right? We can kind of shoot the idea here. The first thing is they grow at their old rate from last year of 18%. That's low. They do that, the stock goes up from $2.28 to $8. Easy, right? They can go ahead, since they're not going to be growing at 160%, they can go ahead and take a look at their competition. Alignment Healthcare, which is growing 43%. Oscar, which is growing 45%. And they can say, you know what? We are going to grow 47%. We want to grow more than them. Okay, boom. $12 to $58. Okay? $12 to $50. And again, we're evaluating them as a Medicare Advantage insurance business at a 0.075% estimation of future free cash flow. We're not evaluating them as a SaaS business. And if we did that, the numbers would be higher. You want to know how high? Okay, let's do it. Let's do it. 260. I'm not doing the SaaS business because we don't know the SaaS money yet, but let's just show you. 260. 260, we're looking at $32 to $157. Okay. You're 8%, we're talking $3 to $10. 18%, we're talking $6 to $21. 35%, which is going to be $16 to $70, and or 45% around that, $28 to $38. But we're going to grow them at the normal insurance side, 97.5, to make it a little better. And I don't know if they want to grow more than Oscar and Alignment. I think it's going to be more of a controlled growth of 35%, which is going to be anywhere between $6 to $26, right? But in the future, 10 years from now, I wouldn't doubt in my mind that this company is going to continue growing. It's going to continue going higher and higher and higher. The question now is, it's growing at 8%, and you can see that it's on the recession case, meaning that the intrinsic value calculation is now responding to Mr. Market. Mr. Market now is starting to basically come on. Mr. Market's starting to realize Clover's potential. And that's the point I've been trying to basically tell you guys. That's my job. I like to find stocks that no one knows. This is my expertise, right? And again, it's the thesis is finally coming along. I just got really lucky that the stock basically started dropping like hell, and I'm getting in a better rate than Google bought when it was private at $1.9 billion valuation. I'm getting a better deal, right? So that's a big deal. Okay. So we're going to go to the live, let's pause for a second. Let's go to the comment section. All right. Senator Chops, love you a lot. I've found a member who day trades tell me I'm throwing money away investing in Clove. Well, I want you to bring them on once Clove bounces, and I would love to interview them and put them on the spotlight. 25K, 165 average, great stuff. All, hey man, Medicare uncensored. How are you doing? I'm good. Seems that Medicare people are coming in. In fact, We just got one person who sells Medicare plans that joined our platform. That's a really cool, right? It shows you, the hat is out of the box, or the genie's out of the box, or whatever the people say, right? 7 p.m. in Belgium. Oh man, you better send me that Belgium chocolate once we're all millionaires, right? Give me some fresh Belgium, right? I'll meet you there. $75 target. So setting a timeline is very difficult, right? But overall, you want to see. It's hard to set. It's hard, right? I'm trying to look at what is the potential of this company. I type in 8%, they're growing 8%, and now I'm starting to see the market start, because before I type in 8%, it showed me these numbers, but Clover was trading at 60 pennies. And if you don't recall, go back to my videos back when it was trading at 60 cents. And I was like, this is an opportunity of a lifetime. This is an opportunity. And then I got literally keyboard warriors saying, every stock you talk about is terrible. This is going to go to zero. 60 pennies? How dare you? Right? They used to all say this. Okay, and the stock went up 100% back to its recession-based value. Okay, all right, it's fine, right? So we're starting to the intrinsic value now is starting. Mr. Market now is starting to become responsive to the intrinsic value, which means that as soon as Clover Health raises its revenue right now, the market's gonna flood. I'm not the only ones doing these intrinsic value calculations, ladies and gentlemen. And if you want access to this, again, link down below for people that are interested and hungry to essentially go from zero to hero and solve the biggest dilemma in the stock market. How do I understand the stock market? And that's the dilemma that we solve. And we provide data to basically fill in that gap. All right. When will Clover become profitable? I don't know. If I have to put, maybe next year, but if I have to put a year on it, 2026, 2027, we'll see. Maybe we don't want them to become profitable because they want them to grow, at base value, net profitability. Maybe I want them, it depends. I want them high growth to penetrate the market and then profitability come later. I don't know. They said they wanted to be profitable first and they're going to enter the market through profitability again. But if interest rates drop back down, I don't know. Remember, guys, I think we got one more economic cycle. Wall Street is going to make you think that we're not going to drop interest rates and the market's not going to repeat itself. Why? Because they don't want you to know this. They don't want you to notice the pattern. They're going to squeeze one more economic cycle out of you. And they're going to, a lot of people are, they're going to try to confuse you and say, we're not going to drop interest rates and stocks are going to go up. That's not going to happen. No, dude, it's going to happen. That's all they know. Interest rates increase or decrease. That's all they have, the tools they have, right? One of advisors that we follow just said S&P is going to go to $15,000 by 2030. We're talking about 11 trillion. That's the S&P now is anywhere between 44 trillion to 60 trillion dollars now. 3x that. We're looking at 120, 130 trillion dollars. The S&P 500 is going to be valued. And we're talking, how much do you think Clover is going to be? Ladies and gentlemen, you're in the right channel, right? You're in the right channel, right? Again, just like if you follow our wonderful stock terminal member here, he posted this beautiful analysis. Where is it? If I can find it. Here's our AI machine. Strong work. Okay, hold on. I'll just type it. I'll do it myself. I can't find it. Sorry. Just like how a lot of retail people were very bearish here. You follow them, you'll lose money because that was the best time to buy. Just like how you see all these YouTubers with all these views. Okay, go ahead and follow the masses. Follow the masses and you'll end up average. Be different and be opposite. You'll be in 0.001%. You want to be average? Follow where everyone goes. Be my guest. Be average and have an average life. Okay? You want to go ahead and go where others have not gone? That's where the opportunity lies. And this graph gives you the best. October 2023 was the bottom and the start of the bull market. But if you ask everyone else, everyone was bearish. Okay? Let's go ahead and let's just give an example. Let's go ahead and go to, or actually, let's go to, what's his name? Graham Stephan. And again, no hard feelings to you, Graham. Right? I love you a lot. I love you a lot. You started this whole YouTube thing, and you have good information, right? But again, this guy's not a stock market guy. The guy doesn't know. The guy's not, and he says that, right? But he makes videos about it, right? So let's go back to where October is going to happen, right? And I don't know. Maybe he removed the video, right? I don't know, but let's see. Here it is. 2023 crash. Look at that. How to use 2020 market crash to get rich. Okay, that's smart. Okay, that's good. Okay, that's a good video, right? But they were calling for recessions, right? Sorry about that. I don't know why it's not, right? The point is, if you go to these people's videos during the peak fear of October 2023, where everyone was basically saying, recession. The guy's on the street, I mean, come on, man. What the hell is this? Right? The guy's literally on the street, sitting outside of a gas station. What else? There was a video of him. One person made a video showing that, he said there's a recession, and then he changed it really quickly to a bull market, right? And it's literally leaning. He's in the side of the road holding a zero free sign. I don't know. I mean, it's just really funny, right? That looks kind of scary, right? And just all this fear and gloom, and there's other. He's not as bad. There's other ones that are really bad, right? The point is, if you want to go where others go, be average. That's fine. Be average. That's fine. But understand that the data speaks for itself. Everyone was extremely bullish in February 2021. You look at Palantir stock in February 2021. Here it was. It was literally 35. It was literally right here, guys. I can't get it to its peak. It was $35. It actually went up to $45. Man, let me just show you guys. I mean, let's not take shortcuts here. Okay, let's not take shortcuts. Look at this right here. This is right here. January 2021. The high of Palantir was $45. $45. The high with Palantir was. You go to our stock terminal, and you see that people were extremely bullish. Everyone was saying, you go to a cocktail party and they'll say, you don't know nothing about stocks. I'm making all this money. And once you hear that, you get the hell out, right? You get the hell out, right? Whenever you see strong movements like this, it's very hard to believe. You want to see these nice, slow, harmonic movements, right? Look, that's a pure textbook move here, right? So, the opportunity is in front of us, and Clover now is reactive to the growth rate. TSS is saying first quarter 2025. I hope so. Based on what? SAS, when will Andrew Toy start market more? What? Start market more? I don't know that. We need more buybacks. We got 20 million. 20 million is a lot. Have you watched the show The Resident on Netflix? Very eye-opening. Yeah, I did a couple of episodes. Yeah, I mean, it kind of shows you kind of how things are. It's a little bit over-exaggerated because it's a show where they go back and forth and they're doing all this medicine stuff. But when it doesn't show you the time where they have to sit down and write notes. They don't show you the note process because that's boring, right? There's a lot of note writing in between, right? Hello. Al just started the workday coffee brew and a Clove live stream. Nice. I got my coffee here too. Hey, Al, hope you're having a wonderful day. I hope you're having a wonderful day too, my friend. 8 fair value. Chelsea needs to buy $1 million. No, I mean, she gets free shares, so let's go, Al. I mean, she did buy some. I have over 300K and I'm not selling until 15 minimum. By the way, Coach Brian, visit his channel. Very nice guy. He does coaching. I need to get into this. 15 high, $4 would be realistic. We really don't need big insider buys anymore, honestly. The earnings will speak for themselves. I agree with you, AF. I agree with you. I agree with you, my friend. I agree. Not selling until 35. Too many outstanding shares. We need Andrew Toy start marketing more about the stock. I mean, honestly, guys, no. I think we need to show free cash flow. I think that's the answer, right? Tell everyone you know to buy some Clove. I mean, I guess, yeah. You can, but I mean, again, the fundamentals is where it's at, right? Can basically double your money in a year. I mean, again, past performance is not equal to future presence. I'm not a financial advisor. Just be careful with this, right? Again, this is just my brain and just educational, right? Help your friends and family first. Best case for Clover will be bought out. Yeah, I mean, you never know, but it's they own majority of the shares, unlike Twitter that didn't, that were allowed to get a buyback. They're allowed to be bought out. Vivek and all of them, they own a lot of the shares. So, right, 25x, not bad. It isn't, right? Best bot I've ever seen. Which one? Wish Lou was still alive. He was funny. I know. Ew, right? What's going on, everybody? Right? Rest in peace, Lou. Rest in peace. I always wanted you to have you on the channel. It's a shame. It's a shame, my friend. We need one large green candle. We need one. We need two. I'm just kidding. So what if RS? Oh, come on, man. Get your ass out of the RS. What RS? Reverse stock. When reverse stock split? What's going on, man? Come on. What did Louis say? Stop being a stop being a stupid little. I wish I would bought more at 68 cents. I chickened out. I mean, it's fine. It's market psychology, right? Just put it under your belt. Market psychology. Where would be a good, I was making videos and I was saying it's the best time to do it, but hopefully now this gives me some form of credibility, like I know what I'm talking about, right? Because I'm the only person talking about this company, right? And you're about to see why I built this platform. I'm using this platform has helped me make money. I'm using what I'm creating and I'm sharing it, right? And the money is going to speak for itself. Where would be a good setting stop loss at? I don't set stop losses in companies that I like. You can do it, not financial advice. Again, not financial advice. You do you, and that's it, right? Right? Hit the likes, folks. But yeah, I like you, man. But yeah, stop loss. I mean, cash secured put. I did a cash secured put at $1 for November. I like that. I miss Lou. Me too. Finally in the green, 61,000. Oh, we're getting a lot of people in the green. Oh yeah, sorry. I'll set aside 5. I'll set aside for early retirement in my 40s, then including my other assets and selling my business. Absolutely, man. This is going to be fun. We're going to all meet together and have a good time. Hopefully we can stay at these prices for lower for a year so we can keep buying more. I agree. See how the narrative changed? Okay, raise your hand if you want this to drop down to 60 cents. Come on, shorts. If you're out there, please drop us down. Drop us down, please. Please. I will pay you 20% of my profits if you drop this down to 60 cents. Please, right? So I got 6K in Palantir at average 15. So goodbye there. We were calling out Palantir at $7, less than 7. It's all on YouTube. It's all on the YouTube channel. You guys can see it for yourself. This guy has no clue. You can't predict the price of a stock in 10 years. If you could, we'll all be millionaires. Yeah, Robert, you're incorrect. Look at my past videos. Look at end phase. Yeah, if that's the case, you sit in your corner, my friend, and you watch and learn and watch the master of the stock market perform his miracle. Yeah, 60 cents. Can I get a 60 cents for AF? Can I get a 60 cents for Mr. Angel Palmer here? Ladies and gentlemen, for all the shorts out there, Mr. Robert, Mr. Short here, please short the stock. Please short it. We want you to short it, right? Short the stock, right? Please short it for us so we can make our money, right? See how the narrative changed? All right. So I'm sorry this video was a long time, but there's a lot of information that needed to be said, right? Robert's a clown, right? It's okay, right? We love clowns, right? And then if Al Ball, if you're out there, my first hater, you have a sweet spot in my heart, right? We always talk about you in the stock term. You will never be forgotten, my friend. I will make a shirt out of you, right? And we're going to make some cups and regalia and all this other stuff. But you're going to be one of my first products of a cup. And I'm going to have you in my nightstand. So I drink water and think about you every single day, baby. Okay? Mwah, right? We need the Tar Heel blue bag. I don't know who's that again. I'm sorry. Tar Heel? Oh, put likes, right? So anywho, guys, I hope this was helpful. I'm going to close off with this. Prices are going to increase. We have lifetime access to data. You can look at our testimonials on the bottom of the Al Stock Trades website. Our members are very happy. I do my best in providing the best possible service out there, regardless if it's morning or night. I'm available 24/7 because of the nature of my work and the type of life I'm having, which is I'm going to be a surgeon, so I'm available. This is a hobby for me. Use the coupon code SAS to get $1,000 off lifetime. Use PayPal to essentially bridge that into monthlies and or our partners at a firm in the United States and Canada. And yeah, there it is, guys. And I hope this was helpful for all of you. And I'm very excited for you guys. This is going to be very good. This is going to be very good. Oh, I see. He sort of disappeared like you then. Oh, I see. I love you too, AF. I love you, all of you guys, okay? We're in this together. We're going to have a great time. And the folks in our stock tournament, we're going to do two different things. We're going to do a all stock trade summit where everyone from YouTube and everyone can apply to. And we're going to do a private party for people that are inside of our stock terminal mastering stock market students. We're going to do a private party in the future to all meet together, Hawaii, Cancun, and just kind of talk stocks, have fun, and all-inclusive hotels in the future, because this thing is going to go to we're going to have a great future, right? It's going to be great. And it's all about community. And I'm very excited for all of you guys. God bless each and every one of you. I'll see you on the next one.